Hi, my name is Bill and welcome to my screencast. I will be discussing the accounting of uncollectible receivables. So what are receivables? An account receivable is an amount of money owed by a customer who has previously purchased a company's product or service. Thus, when businesses deem a certain amount of money non-receivable, they are counted within the bad debt allowance. There are two ways of accounting for bad debts, the direct write-off method and the allowance method. We'll start with the direct write-off method, which simply removes bad debt expense when a company determines the amount uncollectible. For example, Barbara determines $500 will be uncollectible in the following year. She journalizes this as follows, initially debiting accounts receivable by $200 and crediting revenue by $200. Once it is accounted as unredeemable, she debits $200 in bad debt expense and credits accounts receivable by $200. The advantage of this method is its simplicity, though it is a direct violation of the matching principle, which is not accepted by the GAAP. The second method is the allowance method, which divides the accounting processes into two entries, one to record an estimate of bad debts and the second to write off receivables. Hence, there are two approaches for estimating bad debts, one of them being the percentage of sales approach, the other the percentage of receivables, and the aging of accounts receivables. The percentage of sales approach determines bad debt as a certain function or percentage of a company's sales. For example, suppose a company estimates 4% of $250,000 worth of sales as uncollectible, though they would generalize this by first calculating 4% and then debiting the bad expense account by decrediting the allowance for doubtful debts by $10,000. The advantage of this method includes the simplicity and the employment of matching principles, though it does not take into account of pre-existing bad debt allowances. Whereas in the percentage of receivables approach, a company determines its bad debt allowance by estimating a certain percentage of uncollectability from the account of receivable account, which is then used to adjust bad debt allowance for the certain period. For example, it is estimated that 3% of receivables of $100,000 is uncollectible, and the allowances already has a $1,000 credit. The estimate is first calculated to be $3,000, which will be used as a total for the allowance for bad debts. From there, an adjustment value of $2,000 is calculated, which is then journalized. This results in very meaningful net realizable values, but does not match expenses as well as the percentage of values, as current expenses are affected by prior years. The aging of accounts receivable approach involves estimating bad debt expenses by utilizing an aging schedule to assign high percentages of failure to those that have been outstanding for longer. The main advantage of this approach is the high degree of accuracy compared to the others. The main disadvantage is its greater level of complexity in comparison to the other approaches. Thank you for watching.